If you're trying to apply for a home loan or you're trying to get financing for a vehicle or even just a personal loan in general, you're going to have to beef up your credit score. Let's get into my top 5 tips to avoid when getting a better credit score. If you're new here, make sure you subscribe and hit the notification bell where I post here every Friday, and also give this video a thumbs up if you learned anything new. The first tip is you gotta make sure you avoid having too many inquiries on your credit report. This accounts for 10% of your credit score, and these are known as hard pulls. Now there's a difference between the two different types of credit pulls. Now one is a hard pull and one is a soft pull. A soft pull is a credit pull that won't affect your credit score. Employers can do this, credit card companies can do this to review your account and see if you can be pre-approved for a different credit card, and that's how you get those things in the mail, or just to receive a credit line increase for a bigger line of credit. Now, a hard pull is when a creditor makes a decision on whether or not they want to loan you money. You typically have to authorize these before you accept. This is usually in the form of you signing a loan application, or you're applying for a credit card or some kind of rental application, or even a student loan application. Hard pulls stay on your credit report for 2 years and usually drop off after the 25th month, but they only affect your credit score up to 12 months. And as always, if you're unsure what type of pull is going to be done, just make sure you ask the creditor to see what they're going to do, so that way you can gauge whether or not it's smart or effective to go about doing it. Now, in general, if you're afraid of accidental hard pulls that you don't want to have to dispute in the future, you can always look into locking your account or freezing your credit report. And you can always open these back up yourself when you're ready to go and apply for credit. So just be sure to make sure you evaluate your need for credit and see if it's the right decision for you to have a credit inquiry stay on your credit report. The second tip is you've got to make sure you make your payments on time and you don't miss payments in general. This accounts for 35% of your credit score, and this can affect you up to 7 years. Now, the severity of the credit score drop that you will get if you miss a payment will depend on how late the payment actually was. And according to some FICO data, a person with a high credit score that misses a payment will have a more significant drop than a person with a lower score. This can be between 90 to 110 points dropped, which is extremely high. So make sure if you've got good credit, you've got to guard it at all costs. If you have a habit of paying late, your account can be sent to collections or even charged off, which will further drop your score as well. So make sure you do pay on time, and if you struggle with this, make sure you set up automatic payments so that way you never miss the due date. My third tip is you've got to stop avoiding using credit because you're afraid of debt. Paying all cash is not necessarily a good long-term plan, because if you're trying to get something for, let's say, like a mortgage that's a little bit farther out of your reach, normally you have to borrow some type of money from the bank. Now, if the bank runs your credit and sees that you've never had any debt in the first place because you've always paid things in cash, you can still be considered a risky borrower because you still look like you have new credit because you haven't used it, and they've got no way to assess how well you manage credit as well. Now, I always advocate for making sure you have money to cover the expense in the first place. If you buy something like a $30,000 car, it's always good for you to have $30,000 saved up anyway, but there's more effective ways to leverage than pay off the car outright. You can always finance this car and use your money elsewhere to make it more effective, and the same thing goes for real estate, where if you have a house for $650K, you can always control multiple properties by using that money that you would have paid off the initial property by going out and putting down payments and paying the closing costs and getting those homes rented out. This also links into the age of your credit, which accounts for 15% of your score. So the sooner you start, the better. This one is all time-based, and there's no real way to speed up the process on having your length of credit established longer. The only real way to speed this process up is just make sure you start early by just applying for a credit card and using it infrequently, or just having it on your report in general so it starts building up sooner rather than later. Now, this one you've got to be careful, because if you've already been using credit, your average age goes down the more new lines of credit you have. So if you've opened up a bunch of credit cards 3 years ago and then you open a new credit card up now, your average age is still not going to be 3 years. It's going to be lower because it's the average using that new card that you just opened a month ago. And of course, this goes without saying that this will hurt your credit score the lower your credit age is. So just make sure you start, and the easiest way to do that is just apply for a credit card, put a little bit of money on it, and make sure you pay it off each month. You can also watch my last video that I'm going to put a card up here for, and that video goes over credit card mistakes to avoid and different tips and tricks that you can implement to make sure that process goes smoothly. The fourth piece of advice I got for you is to just make sure you're not using too much of your balances and taking on too much debt that looks unmanageable to other lenders. Now, this accounts for 30% of your score, so you've got to make sure that you can manage your debt in a timely manner, and also the balances don't look extremely high. Things like revolving credit lines such as credit cards are weighed higher than other ones such as student loans or mortgages. So a quick example is if you've got a credit card that's got a $2,000 credit limit and you use up $1,900 of that, then you're using 95% of your utilization rate, or your utilization ratio would be 95%. So this looks to other lenders that you need more money and you're strapped for cash because your utilization is so high on the credit card. So just make sure with this one that you pay on time each month, and doing so will allow your creditor to do an automatic credit line increase, or you can ask for one yourself every 6 months, and make sure you do these with cards that have a soft pull and not a hard pull to be able to up your limit and lower your utilization rate on that card. Remember that you don't need to max out your card each and every month. Just put a little bit on the card and use that and pay it off, and make sure that it looks like you're using credit but you're not overwhelmed by using it. Now, it's a myth that you have to actually use 100% of your credit to be able to get a credit line increase. You just need to make sure you use the card just a little bit each month and pay it off in full each month, and then ask the creditor every 6 months, as I said previously, to up your credit line because you've been a good customer and you don't have any accounts that are red or in the negative. Now, my fifth tip is making sure that you've got a good healthy amount and mix of credit card types. Now, this last one accounts for 10% of your score, and there's many different types of credit you can get just besides doing credit cards. Now, revolving accounts are things like credit cards and home equity line of credits, or HELOCs. Student loan, mortgages, and auto loans are known as installment accounts. And the other type of account you can have is called open credit, which are usually things like charge cards or anything where you can borrow money, but you have to pay it back each month in full. You definitely don't need to go looking for these to just pad your credit accounts if you're just trying to play with your credit score, but just be sure that if you need these types of installment accounts, open type accounts, or revolving accounts, that you make sure you're not scared and go ahead and use what's available to you. Now, if you've watched this far, I'm going to give you a bonus tip, which is making sure you check your credit report. You should check your credit report often and see what other lenders are seeing before you go out and apply to them. It doesn't have to be a guessing game in whether or not you might get approved when you can clearly see what's on your credit and work on it on your own time. This will also help you make an educated guess on if you're going to get approved for whatever type of application you're applying for or not. You also want to check your credit report for any different things like misspellings or mistyping of addresses or phone numbers, and make sure you correct those. You can dispute incorrect information pretty easily, and you can just go on somewhere like Experian's website where you can do these things, where there's a simple form that you just fill out and you put a note stating whether or not you reached out to your creditor, and they will handle the rest for you and see if it's valid or not. Any errors on your report, or having too many errors on your report, can make or break the decision whether or not the lender is going to lend you money. You're entitled to check your credit report every 12 months from 3 credit reporting agencies. This includes Equifax, Experian, and TransUnion. And you can get these reports by just going to annualcreditreport.com, and once again, you get these for free, no credit card needed. You can also check your credit score weekly with things like Credit Karma or Credit Sesame to be able to see just if you're on track, what kind of accounts you have, and what things you should be working on throughout the year. Thank you guys so much for watching this video. If you like this video, make sure you hit the subscribe button and also click the notification bell. I post here every Friday with helpful bits, tips, and tricks. And also, if you like this video, make sure you give it a thumbs up, and also follow me on Twitter, where I post different things about stocks and real estate daily. Make sure you stay tuned for the next video, and I thank you guys for watching. See you next time, and I hope you enjoy this channel.